What if you could earn 12 to 20% or more in annual returns from real estate with no management and with no personal debt? Just smart capital working inside high margin opportunities. Hi, I'm Craig Evans. I've done over $150 million in real estate deals, mostly for myself and a small circle of private investors. Now, we've updated the model to give wholesale level access to all accredited investors without the need to put up 7 figures of personal risk. Today, I want to teach you a strategy that most investors will never see, but it's a strategy we use every day at DBL Capital. More importantly, it's a structural shift you can learn from, whether you invest with us or not. Leverage works, but most people use it the wrong way. They borrow in their own name, they personally sign for the loan, they personally manage the project, and they over-leverage the deal, banking solely on appreciation. But then when the market shifts, the full risk is on them. The result? What looks like a good deal can turn into a full-time job with a fragile return. Here's the principle that completely changes the game of real estate. You don't need to take on personal debt to benefit from leverage. Leverage is simply a multiplier. If someone else carries the debt and it's structured conservatively, you potentially can still access increased returns without taking on increased risk. Let's walk through a model. Say you contribute $250,000 in equity. The rest is backed by the fund, not you. With 70% leverage, which we've chosen to be our maximum aggregate leverage, we can build and sell about 5 affordable homes. Affordable housing is our primary strategy in the fund, in addition to distressed acquisitions at discounted prices. Conservatively, we estimate a profit per affordable housing job to be $24,200 or more. If conservatively we estimate we can build 5 houses, here's the waterfall that puts you, the equity investor, first. That means you're paid 8% pref. Only then do we get our 1.5% asset management fee. After that, it's an 80-20 split up to the 12% target. Finally, there's a 50-50 split on all returns above that. As always, this is all net of fees and expenses. The bottom line, in this hypothetical scenario, your share could land at around $45,900 return on equity, which is an 18.4% return. And remember, that's without you signing for any debt and not assuming any market appreciation. And because we roll the investment inside the fund, the growth can potentially compound very quickly. Most investors chase appreciation. We call that momentum. What we're looking for is margin. Margin is what protects you. You create value by building or buying well below market, not just by betting on the future. If the market stays flat, margin still pays. If the market drops, it cushions the fall. And if it goes up, that's just icing on the cake. Want lower risk? It's not just about the deal, it's about the structure. Here's the filter we use at DBL Capital, and one you can apply to any real estate deal. We strive for no personal debt for the equity investor, moderate leverage backed by the operator. The basis has to be right for every deal, not just betting on future appreciation. And there has to be an experienced operator. That's how professionals stay in the game through every cycle. Paraphrasing Shakespeare, to grind or not to grind? That's the question. To truly grow your wealth, the main tools you have are your time and grit. How much time do you have, and how much are you willing to grind it out for what you want? Most people don't have enough time or grit to truly grow their portfolio. To maximize long-term wealth creation, nothing beats passive investments with smart leverage. That's why I call this smart leverage for passive investing. Smart because it's based on operational margin, not leveraged appreciation. The leverage does not require personal guarantee. And good passive investing is designed to compound internally without constantly rolling from one deal to the next. That's not just easier, it's smarter. If you have capital but don't want the stress, the risk, or the time commitment, then our private equity real estate fund at DBL Capital might be the exact structure that you've been looking for. It gives access to institutional level returns, but with far less personal exposure. There's no deal chasing, no property management, just passive investing with smart leverage. Our fund is only for accredited investors. If this is you, or you want to confirm that you're qualified, then visit dblcapital.com or click the link in the description below so you can get connected to someone on our team now. In summary, you don't have to rush into any deals, but you should be paying attention while the market is still offering discounted prices. If these principles of our fund resonate with you, if you value structure over speculation, head to dblcapital.com to download our fund overview and subscribe here if you want more insights and breakdowns like this one. Download the fund overview at dblcapital.com.